Man, I wasn't just sure about the SPX. I was looking at the monthly chart just a week or this week, and did a post about. I thought maybe we need another 8 months before total breakdown of the SPX 500. I had to look at the sectors, and there was still some sectors gaining strength, going upwards, then we're completely deconstructing, adding complete tops on the monthly. Always looking at the monthly for the higher time frame. For sure, there's down moves on the weekly. There's within those moves, there's many moves, ups and downs on the dailies and on smaller time frames, and on the monthly. For me, that is the higher prevailing time frame that I can look at. Look at that, still not fully. So here it could look like a big bearish or downtrend move on the weekly, but the real big move in my eyes is this top pattern, top to bottom, added to the breakdown line. In this case would be something like this. Clone. Something like that. And that's like, we've been going up so long, so there's so much room to go down. I'm not too worried about what's happening now, what's happening in the next weeks. I really want to play the momentum of all the sectors, total meltdown, that at the same time. See here, this breakdown, October 8th. Just check a few episodes back. It was kind of a long episode, but eventually some start breaking before others, and they pull back, they get some strength while the others keep pulling down, and eventually they all break at the same. And once they all break at the same, there's an acceleration. It's the panic red button. You're going to start hearing CNN. And I haven't been hearing those news yet. I asked my girlfriend if she had heard about the market crash or stuff like that. And she says no. So I guess it's not bad enough. We're like in StockTwits, Twitter, and we're there and end of the world. But for the mainstream, and even the mainstream other than CNBC or like news media, market related finance media, this is really going under the radar. So nobody yet is panicking. That could mean also there's still a lot of velocity that could pick up before there's a full-fledged panic. See how they all at the same time, October, they all coincided. So I was looking at the sectors, and wow, it already reached its implied measure move, guys. The materials. That's insane. Very fast. And some were deconstructing. See here, for me, the top pattern is way bigger. You're still above the 12-month moving average. I'm expecting shoulder, maybe a head, another shoulder here, and then going down. Same thing here. Oh, well, starting to be below 12-month moving average, but I'm still expecting a bounce here at these levels. Go back up. Oh, okay, this one's in starting to total meltdown. Oh, this one dropped energy, testing the bottom. Starting. And I just saw we had a few more months before utilities, if they break down, and real estate still hanging in there in stage 3. And consumer staples still there before the total meltdown. 2008, how'd that look like? It had a short, it fell with the other guys, with the other ones, but it had a short, seemed to have a shorter stage 4. See, real estate has been falling way before the actual, and then at that bam, when the other ones all started crashing at the same time in October, accelerated. So this brings me back to sidetracked SPX. Can this actually crash, like a real crash? A monthly, here's my monthly defined breakdown line. I have it right here at the 2630 level. Can this actually crash and close below that 2600 and have that implied measure move all the way down here. And what I don't like about having that breakdown right now is the 12-month moving average is still going upwards. And you don't want to short when the 12-month moving average is going upwards. You don't want to be in the stock when you close below it, but you don't want to short it necessarily. You want to make sure that it started going down, and then after that, once it's really going down, then if you have a break below a horizontal breakdown line, when it starts going down, then you have that weight of evidence. You have more tools giving you more clues telling you that it's time to short. So like you see right here in 2016, you had a similar, you have a top, then close below 12-month moving average, breakdown. Well, not really. You have to wait for it really to start angling downwards. You want to close below important support, then goes back up above, and then every time it went below, whipsaws. These are whipsaws. So if you go on the weekly, you had some closes below that breakdown line, probably below some weekly defined breakdown line. You would have entered only to get whipsawed, went back up. Monthly. And same thing here. So now I have a nice monthly defined breakdown line. But right now, if it closed below the 12-month average is still going upwards, I'd have a feeling that it's going to go back up. Price action. Let that 12-month average starting to flatten. Maybe making the other shoulder here and then break to get that big target right here. And that brings us close to this 2015. Sorry. Oh, man. 2015 to 2016-17 base, sideways move, and then explosion. So that's how I say for the SPX, guys. Let's zoom in. We're going to apply some Stan Weinstein. Oh, move that. Move that. Remove all drawing tools. Okay. Stage 2, some volatility, sideways move, decide to go back, continue. And now, what's happening here, guys? We are below the 30-week average, close below it, increasing volume, or sharp volume right there. See, you could tell me, hey, Pat, well, there's a big volume here. Why didn't you short? Well, again, weight of evidence. Yeah, very not healthy. But you're still in the 30-week average going upwards. You're not even close below it. You're above the Ichimoku cloud. And if I look on the monthly candle chart, probably above monthly defined support. So, yeah, that's very bearish. And what happened is the following weeks, you didn't explode back up. You needed many weeks to churn out for the market to digest whatever reason that you had that big red candle. And after that, okay, finally that wasn't that big a deal. And then it started trying to climb upwards. We have a lot of volume here on that big red candle. But again, you wouldn't have shorted there because you're still above the Ichimoku cloud. You're above the monthly defined breakdown line at 26.30, I said. I'm going to try it back. 26.30. Monthly defined breakdown line. Let's go back. Try to make sure. Yeah, 26.30. Not a short. That means you're starting, you maybe don't want to be there. You should maybe have end of stage 2. Next one confirms you're below 30-week average. You shouldn't be there anymore. If ever, for whatever reason, you didn't follow, you didn't get triggered out. You were oblivious to the warning signs. Right now, you had last week's candle. You should have been out. This week's candle, definitely. And now, it's still not a stage 4 short, guys. Stage 4, you're going to want the 30-week moving average going downwards. You're going to want to close below that monthly defined breakdown line. Stan says you want to be in harmony with the higher time frame. You want to be below nearby support another Stan Weinstein tenant, and we're defining that nearby support with the Ichimoku cloud, or you could even define it with some weekly defined support, but the important one is the monthly. So you have all that, and right now it's playing out right now. So whatever happens here, we want especially a monthly close of below 2630, and now that's going to coincide with being below. Well, depends where here. If we take a week or two below the Ichimoku cloud, and you're out of that support, guys. That's a stage. That for me is going to be a stage 4. And what I'd really like to see is another increasing or some nice severe red candles, crescendo red volumes. And what's happening right here, the week is not ended yet, but we have decreasing volume. So that is not a trait of a straight capitulation right now, but it's a big warning sign. Shouldn't be there anymore. You have to let the markets digest whatever's happening here. And remember, there's always two sides to a metal. And don't let the chart, remember the chart, low, high, tries to fit everything. But let's say you move it. There's another case scenario right here. Let's say I played just on the weekly. And it's this. You're starting to define a sideways pattern. And this, also the weight of evidence is probably not pointing to that. We could actually bounce here, and you could actually go back here, and then you could actually continue, guys, and continue upwards. If you're too close to the monitor, if you're too much, everybody bearish, it's going to crash. There's still a possibility of, as long as technically it hasn't broken down for me on the monthly, you still have this possibility of sideways move and then going back upwards, guys. There's always two possibilities. It's good to be aware of both, but right now we're angling towards the more bearish of scenarios. Most of the sectors more of them are breaking down than breaking out. But for you to minimize your chances of being whipsawed on a pullback, because there's still some strength, because buyers are going to maybe get in here at the support level, you really want to wait to be out of the Ichimoku cloud below that 2630 level and get that nice measured move. Patrick, look at all these lines. So many lines. Below. And that's a nice move. So if you want to make money, you want to grow your NAV, patience is required. Maybe I'm too patient sometimes. But this is the move I'd like. So is it going to happen this month? I don't think so, but I'm still anticipating that it could happen. I really want that. I really like that pressure to start going downwards. So it increases my chance of any pullbacks are gonna fail back at that support and resistance and go down. Then if the 12-month moving average is still going upwards and not fully going down, then those pullbacks could actually still have a chance of reverting that 12-month moving average from flattish to going upwards. Remember, the more it's angled downwards, the more you need price action above it to start bringing back up. So that is my rant for SPX, guys. Trying to figure it out, trying to anticipate what's going to happen. And the more I think clear-headed before there's news, the more I make my own consensus on how I'm going to play it in the eventuality that's a breakdown, and not just FOMO, fear of missing out, that it goes down and then fine, I have to short, and then you short, then it bounces back up because you followed whatever, you had to follow the crowd and not your system. I really wanted to go down maybe and then go back up and then down, just like this little drawing here, all the way to this target here. Cool. All right, don't forget to subscribe if you like it. Thanks for listening. Ciao, guys.